Welcome to Pensions 101, a series designed to help you make sense of pensions. My name is Martin, and today we're talking about the pension carry forward rule. Each year, you can contribute over your annual allowance and receive tax relief. However, you'll be taxed on those contributions, effectively wiping out the tax relief you'll have received. The pension carry forward rule may allow you to exceed the annual allowance, but avoid the annual allowance tax charge. For a summary of what tax relief is and how it works, you can watch our personal pensions video. The annual allowance is the limit on contributions you can make before being subjected to the annual allowance tax charge. Each tax year, your annual allowance resets, like how an individual savings account or ISA works. Depending on your income, you may have a tapered annual allowance. Those with a tapered allowance, like the highest earners, will reach the point where a tax charge applies at a lower contribution amount, compared to basic rate taxpayers with a standard annual allowance. The rules for pension contributions are a bit different for the highest earners. If you're watching on YouTube, remember to check the description box below for the current tax year's figures. Usually, you'll be taxed for any contributions you make over the limit. With the pension carry forward rule, you might be able to contribute more than your annual allowance. You can do this by carrying forward any unused annual allowances from the previous 3 tax years. There are some key rules to know before carrying forward unused pension allowances. You'll need to use up the current tax year's allowance first before tapping into unused allowances from previous years. These allowances are then used chronologically, starting with the oldest. Also, you must have been a member of a pension scheme during the year or years you're claiming unused allowance. And you can't receive tax relief on contributions that exceed your earnings in the tax year you are making the contribution. Remember that the annual allowance applies across all of your pensions and contributions, including those made by your employer. The annual allowance also includes the tax relief you receive from HMRC. This limit remains no matter how much unused allowance you have remaining from the previous 3 years. The tapered annual allowance applies for the highest earners. This allowance considers total income along with contributions made to retirement savings. Those exceeding certain thresholds may be subject to adjusted allowance limitations. Claiming tax relief on unused allowances can be especially useful if your income changes each year. This might be the case if you're self-employed. It can also be useful if you come into an inheritance or have an unexpected lump sum to invest. It's worth checking whether you can make use of the carry forward rule to get the most out of your pension contributions. Remember, pensions are an investment. As with all investments, the value of your pot can go down as well as up over time. Your capital is at risk. Thanks for watching.